Good morning, everybody. Welcome to another episode of the Bitcoin Morning Brief with Coinbase and Jimmy Sung. I'm Leah Walton. I'm going to be hosting the show today. Today is a very exciting one. I'm very excited. Tone and Jimmy, would you like to say hey?
Yeah, thanks, Leah. Thanks for driving the show.
Yeah, glad to be here. It is an important and interesting day. Pretty much every day in Bitcoin, isn't it?
For sure. All right. Jumping into screen share for our first story. Naturally, as I'm in DC and an obnoxiously proud Washingtonian, except for when the Skins make me sad on Sundays, we picked the story about the IRS. So,
IRS.
The most fun.
All right, there we go.
All right. So Coinbase informs 13,000 affected customers of imminent data handover to the IRS. So even though Coinbase was able to limit the damage to 13,000 people, to me, it seems like this is another bad example in which dealing with an exchange that is not anonymous can be a bad idea. Tone?
Yeah, I actually heard Andreas Antonopoulos was one of those people. A couple of other people actually texted me the actual letter that they received from the IRS notifying them that they have been on that list. I mean, my only thing to them is that's exactly what Coinbase was supposed to do. And for some reason, they didn't actually I don't understand why this is a problem, right? That I kept saying for a while that they're supposed to report you like any other exchange does. Leah, you want to put the story on the big screen?
You got to click on yourself.
Okay.
Yeah. Highlight yourself on the bottom.
Yeah, so it has a white background. We're work in progress, guys. It'll get much better. Yeah. So with Coinbase. They're supposed to do that. Like my broker, with the broker that I trade with in traditional markets, at the end of the year, I get a report. I get a report with everything that I've done and how much profit I made in my trading and how much losses I made in my trading is just one final number. You made X amount of dollars this year, or you lost X amount of dollars this year in your trading. Now that line item also gets sent to the IRS. Now, if I don't file that line item on my taxes, the IRS will withhold my refund, and they're going to notify me saying, "Hey, you did not put in your gains or losses from your trading." Now, Bitcoin is a little bit different in that, and not only do you put in your gains and losses from your trading, well, actually, no, it's the same, right? Because if I just hold the asset at Coinbase. Same thing as I'm holding Apple stock. At the end of the year, it doesn't count until I actually sell it. Now, the only big question mark with Coinbase was what happens when you move your Bitcoin off of Coinbase into your cold storage? And like I keep explaining to people, the only thing that makes logical sense is for Coinbase to classify the withdrawal of Bitcoin from your Coinbase account as a sale. Because if they don't, if Coinbase assumes that when you withdraw from Coinbase, you retain possession of the Bitcoin, you are going to have a nightmare with the IRS because the IRS is going to show up and they're going to say, Coinbase told us you're still in possession of the keys. And you're going to say, no, I'm not. And you cannot prove that you're no longer in possession of the keys. Now, if Coinbase reports to the IRS that your withdrawal from Coinbase was a sale, and then you say to the IRS, no, it wasn't a sale. I can prove to you that it wasn't a sale. Here are the private keys or public keys. Don't give them the private keys. Here are the public keys to that Bitcoin. I am still in possession of that Bitcoin, right? So you can prove that you have something. You cannot prove that you don't have something. This is why it makes 110% sense that the IRS reports the withdrawal of all Bitcoin from Coinbase as a sale. Now, if you buy from Coinbase and you immediately withdraw, there's no capital gains and there isn't anything, right? Like the IRS doesn't even have to report you to the IRS if you just buy from them. And they might report that you bought Bitcoin, but they don't know whether you still have them or not. And If they report it as a sale, then hey, you bought Bitcoin from the IRS, you immediately sold it on the open market, and they have no idea whether you made money or not. So that's the way to use Coinbase. Really, if you want, just buy it from them and immediately move it to your private key. To me, this is what Coinbase was supposed to do with the IRS for everyone, not just the 13,000 people. This is the downside of using Coinbase, and you want cheap Bitcoins at 1% premium. This is what you're going to have to deal with. Or do what I did and pay like a 5-10% premium on the street.
Yeah.
Just be careful.
Yeah. Jimmy, 13,000 people for all the many people that are using Coinbase. What do you think about that small number?
Yeah, I mean, I don't think this is really a Coinbase problem. I agree with Tone in that regard. It's more a regulatory problem. I mean, what business is it of the government to like know how much money you have or what you're transferring or what you're trading? They like to know, and this is sort of the degradation of civil liberties in this country. Part of it is that the government somehow has taken over the right to know about all of your financial transactions over a certain amount, which seems kind of ridiculous to me. But that's sort of the rules that are in place right now. I'd like to see laws like that sort of upended, but the justification, as always, is drugs and child pornography or something like that. That's always the justification they give. Never was a fan of that. Still not a fan of sort of knowing about every citizen's stuff. I mean, if you talk about privacy, this is, financial transactions are like the biggest, most private thing that most people have. Yet the government knows all about it. It's silly to me. But what can you do? It's the government.
One last comment on this. Somebody commented in our live chat about 50 Cent declaring that he lost 700 Bitcoin. And I made fun of 50 Cent for announcing that he had Bitcoin, considering he's in the news for being like broke and bankrupt and not able to pay his bills. And I said, well, that's kind of dumb, because if you announce that you have Bitcoin and then you're also trying to file bankruptcy, you got a problem with the judge, because the judge will just, mandate that you have money and now you're in trouble. So I'm not surprised at all that 50 Cent has recently come out and said that he's lost 700 Bitcoin. I mean, just guys, keep your mouth shut, right? I mean, don't be Tone and Jimmy doing podcasting sometimes.
Well, so so the court documents showed that he actually doesn't have that. And he said, if it's not detrimental to my reputation, I'll let the stories that lie about me sort of stand out there, because I don't feel the need to correct them because it takes too much energy. And I think that's the right way to sort of handle that. But I don't know. It looks like he doesn't have any Bitcoin. It was just sort of a made up story by TMZ.
All right. 50 Cent. Okay. So as a follow up to the tax issues, here is what's going on in India. Switching over now. So I think this is a super interesting article so India's tax department issued notices to 100,000 crypto investors. So actually a recent report that I read last night on NPR that stated that only 2% pays income taxes. Tone, what do you think about this?
Yeah, so that's kind of India for you, right? This is in one of my presentations, I talk about how India was one of the first ones to try and eliminate their physical cash, the physical bills, because according to a Harvard study, 35 to 45% of India's GDP is straight up missing because of the cash economy and people not paying taxes. So I'm not surprised India is going after the Bitcoin people. And I believe there were some pictures of the letters that were sent out where India is demanding people's private keys.
Wow.
Is that true?
Yeah. Jimmy?
Yeah. Yeah, sorry, a little bit of a connection thing. So yeah, I don't know what happened, but anyway, yeah, India is like a lot of different countries. I think Greece is very similar. A very cash-based economy, and obviously the government wants to put their grubby hands on the money and get their tax revenue. And it's interesting. A lot lot of countries will be lax about almost everything except for tax collection. That's the one thing like that they will absolutely like enforce to the nth degree. And it's come to the point where they'll go and find out exactly what transactions you have and tell you what you owe. Never was a big fan of stuff like that. This tells me that the Indian government's becoming more authoritarian, and India's weird politically. So I don't know how much more to say. I don't know if I have much more to say on that, but yeah, it's just a weird place.
Yeah, I spent a good amount of time consulting in rural India, and exactly to your point, Tone, the informal economy really runs it. So I think this is going to be very difficult to enforce. Exactly to you guys' points. I think it's going to be really interesting. All right, moving on to a very fun one. Kleinman. So we have 10 billion. Dave Kleinman's estate files mammoth suit against Bitcoin creator Craig Wright. So does anyone really believe that either of these two actors are Satoshi Nakamoto? Tone?
Well, I think there is a pretty good case that has been made about David Kleinman. And I've been so meaning to do a podcast about this. But again, it's kind of like crypto scam. It's at this point, it's like a unicorn, never to be seen again. So back in 2016, I believe, I think Kleinman died in early 2016 or 2015, and no one really knew who Dave Kleinman was until after his death. And then after his death, all of these things came out. Now, I do credit the Bitcoin Uncensored guys, Chris DeRose and Joshua Ansef, who happened to be living in Florida where Kleinman was living. So they went out there and investigated. So from my understanding, David Kleinman died of complications with a shotgun. And it's a little unclear whether it was self-inflicted or not. And only after his death, where everyone started digging up. At first, it was nothing, but then eventually, hey, this guy actually has a background in cryptography. Hey, this guy has connections to some of the players in the Bitcoin space. And lots of people on Reddit came out and did some more investigation where there was a case to be made that this guy did do some serious cryptography, some serious mathematics, and he did have ties to Craig Wright. Also, I did see somewhere where he had some ties to Hal Finney, who was another person suspected to be Satoshi. So I think there is a case to be made here for David Kleinman, being one of the masterminds of Bitcoin. And then Craig Wright, fake Satoshi, came out immediately after David Kleinman's death, pretending to be Satoshi, claiming that he had all the Bitcoins, but yet those Bitcoins were in some kind of a smart contract where he can't access them himself for about 10 years. So the suspicion was, even 2 years ago when I ran across this, along with now, is that fake Satoshi somehow got his hands on David Kleinman's private keys on USB sticks or old hard drives after Kleinman's death. And therefore, he gave himself a 10-year runway to try and decrypt those keys, to then not only would he have, 500,000 to 1 million Bitcoin, he'd also have a more serious claim that, hey, I have Satoshi's coins, therefore I'm Satoshi. And so that's kind of the claim, and it almost makes a little bit of sense to me. But you guys go ahead and comment, and then we'll see what our viewers will say later on.
Yeah, Jimmy, definitely curious on your thoughts of this. I've heard people say, we have an article that I'm going to pull up now that you sent me that entitled "The Bitcoins That Never Were." So we have a little differing opinions here.
Yeah, so this article is by Kim Nielsen. Kim, I met Kim at Breaking Bitcoin last year in September, and he gave a very memorable presentation on what exactly happened at Mt. Gox, specifically, where the money was stolen, when it was stolen, how it was stolen, and he did all this for basically blockchain forensics to figure out exactly what happened over there. And one of the claims that came out of that was that was the fact that, Bitcoins were stolen way before people knew. It was actually when Jen McCaleb sold Mt. Gox to Mark Karpelès, there were like already 65,000 Bitcoin missing or something like that. 80,000. Yeah. So he inserts himself here in this blog post. It's the same guy, Kim Nielsen. He's talking about the $10 billion lawsuit. And if you scroll down, Leah, a little bit, part of what's in there is that all of these things in the actual lawsuit, a lot of these addresses are actually not what the lawsuit claims. Like, these are just like large addresses, and a lot of these have been proven to be part of like owned by Mt. Gox or Jed McCaleb or other people. The only thing in common, he says at the end, between all of these addresses that the lawsuit claims is that they just had a large number of Bitcoins in them when back in the past, and that's the only thing in common. It's clearly not what the lawsuit claims, which is that, oh, these were all owned by Dave Kleinman or Craig Wright or whatever. It's actually a very interesting article, and if you're interested at all in blockchain forensics, this is how you do it. Kim is more or less the gold standard when it comes to that, because he did break the Mt. Gox stuff. I find the evidence that Kleinman is Satoshi or Craig Wright is Satoshi to be completely bunk, right? Like it's BS to me. It's unless you're going to sign with the Genesis key or something like that. And there's a lot of people that have been saying that in the past. You're not Satoshi, man. Like, there's so many people that it annoys me every time people do this and they don't come up with hard proof. Nobody's going to take you seriously. This is a community of cryptographers and programmers. You need a higher standard of proof.
Tone, how long have you been?
Go ahead.
Oh, how long have you been looking into this?
This particular one?
Yeah.
Or
about specifically Kleinman and this issue.
Oh, I haven't been looking into it that hard, but clearly Kim Nielsen is. Like I said, I had dinner with Kim several times in Paris, and good guy. He knows what he's talking about. He broke the Mt. Gox. He proved more or less that Mt. Gox was insolvent before it was even sold to Karpelès, things like that. So, yeah, I would trust Kim's judgment on this, and it's actually kind of proven. You can go look at the blog post and see exactly, why Kleinman is not Satoshi.
Yeah, so it sounds like the Kleinman camp is believing the story that was around the internet 2 years ago that Kleinman is Satoshi, and you're saying they just compiled a bunch of addresses and threw a lawsuit in there.
But, I'm guessing Craig Wright compiled these addresses and sent it to them or something like, or claimed it at some point.
So maybe. So Craig Wright is potentially claiming that these are his Bitcoin, and Kleinman camp is like, okay, so we'll sue you for them because we believe our guy is Satoshi.
Something like that.
The two fake Satoshis are arguing with each other. I love it.
Okay, gentlemen. So this one, Jimmy, I'm very curious for you to decipher this, especially for me. I did find this to be an extremely fascinating article because Palestra has concluded that these techniques, smaller, faster, stronger for verification. So I guess my question specifically to start with is, can you explain the dynamic between the zero knowledge proofs, the confidential transactions, Mimblewimble, and the difference between range proofs and bulletproofs?
Yeah, so let's back up a little bit. The last story was about supposed cryptographers and researchers sort of arguing over money. These are the actual real researchers over here. These are, Antti Polstra, Greg Maxwell, Dan Bonnet, Benedict Bunce. These are the actual real researchers. And basically the story of Bulletproofs, it starts back in like 2015 when Greg Maxwell wrote that confidential transactions paper. I think it was also with Peter Woolley and Andrew Polstra and others. But more or less, it allowed you to do a zero knowledge proof about how much the amount is. So you could send Bitcoins or whatever asset to another person without knowing exactly how much it was in there. And that's obviously a really useful thing, because if you don't know how much is being transferred, then it takes away information from any attacker, and the attack surface reduces as a result of that, and your privacy is enhanced, et cetera, et cetera. The problem with confidential transactions is that the range proofs, a range proof basically is like, it says, hey, the amount of Bitcoins in here is somewhere between 0.0001 and like 43. Like you won't know exactly how many Bitcoins are in there, but that's the range that it's in. And that's what a range proof is. It proves that it's within that range, but you don't know exactly how much is in there. And Monero famously sort of adopted this, and the range proof is kind of expensive. It's like several kilobytes per transaction. So when you go into Monero and transfer some money from A to B, it's like several kilobytes of data in order to prove that it's between 0.0001 and 43 Bitcoins or Monero or whatever. So that's kind of a big drawback, right? Because if you have like hundreds of transactions, that's already like, not that many transactions can go through, and it's very heavy and things like that. So what Bulletproofs is well, so Maxwell Polstra, they talked to Dan Benet. He's a cryptography professor at Stanford. He, if you've been on Coursera, Cryptography 1 is taught by Dan Benet. I took that course several years ago. I'm still waiting for Cryptography 2 to come out. So Dan Benet, if you're watching, you should probably release that course so I can take it and understand more of that stuff. Anyway, so he did some research, and they were like, okay, well, kilobytes, that's way too much. Well, I'm sure we can figure out ways to make this a lot smaller. And Andy Polstra and Greg Maxwell, they were like, all right, great, let's see what they come up with. And about a year later, they came up with something called Bulletproofs, which was amazing, because not only did it reduce from kilobytes to all the way down to like 600 bytes or something like that, but it's generalizable. You could prove anything that's true, which is kind of amazing. And this is the whole thing behind ZK Snarks, or what Zcash does, which is that you can prove something is true, but unfortunately it takes a lot of time to create that proof. You can verify it pretty fast, but creating it, and if you use Zcash and try to create like a private transaction, it takes like a minute on your CPU to produce that proof. They made Bulletproofs a lot like ZK Snarks without the trusted setup. So it's even better than ZK Starks, which is something that a bunch of Israeli researchers found not too long ago. But it can prove anything that's true. That said, there's some, like it takes longer, even longer than ZK Snarks in order to actually produce that proof. But it's this whole generalizable thing. It's an astounding sort of thing from a research and I guess what you would call research and computational perspective. The fact that you can have very small proofs that increase logarithmically, not linearly, that are really like can prove anything. It's got an application that's very wide, and it's implementable and native with Peterson commitments and things like that. It makes implementing it a lot easier. So from a computer science perspective, this is an astounding paper. I have to go and read it. Andy Polstra, in that post that you were showing, Leah, more or less he was sort of giving a summary of all the benefits, but the actual math and stuff like that, they're in that paper. I'm really going to have to go and dig into the paper and figure out what the hell's going on, because this is just such an astounding result.
Yeah. So why don't we turn to the mempool? Jimmy, unless you have something last to say on that.
Well, I got a question for Jimmy on the Bulletproof stuff. So how does this compete with, let's say, the Monero stuff?
Well, so it competes with Monero because the confidential transaction, I mean, the range proof is much, much smaller. So I imagine, I've talked to Fluffy Pony. He wants to go and implement bulletproofs for Monero, right? Like that's an obvious optimization because right now their transactions are huge because the range proofs are huge. If you can reduce the range proofs significantly, that's going to be a huge thing for their blockchain. It also competes with Zcash because instead of ZK snarks, you can now utilize bulletproofs, and ZK snarks is very, very heavy on CPU. Monero is heavy on disk space. ZK snarks or Zcash is heavy on CPU. And it, you know, like you can compete with that without having the trusted setup. You know, and you can prove lots of things that way, even if it takes like 20, 30 seconds on your CPU or whatever. So in many ways, it's you know, like the optimizations from here will only get better, and we can bring a lot of this stuff into Bitcoin.
Yeah, so that's interesting. I mean, that goes back to somebody's point when people keep talking about altcoins, and it's like, hey, when was the last time an altcoin development made it into Bitcoin? And the answer is never. And when was the last time like a Bitcoin development made it into an altcoin? That's like every day. But one more question. So is this something that's going to need to be in the protocol? Would it require a soft fork, or is this something like a layer on top as more of an opt-in where you don't have to make your transaction bulletproof, but you could with the right wallet and the right, you know, check mark in that wallet?
Yeah, it's hard to know exactly how this will get incorporated. I think the clearest way to make this work is to make it a side chain, and certainly, like, you know, Mimblewimble uses like signature aggregation and things like that, which will think a lot of these concepts.
Sidechain is a whole other can of worms that we haven't even gone into with you, Jimmy, because this is so debatable. We got prominent people on both sides here.
Well, the only way you're going to, I don't think you can upgrade it without well, I mean, you probably could, but it's going to be fairly difficult to do something like this as a soft fork. And I don't know if there's like sort of a roadmap for any of that by any developer at this point. It's from a research perspective, astounding that you can get results like this. And the clearest path for me that I can see is some sort of sidechain, whether it be like an element style sidechain or, you know, a drive chains style sidechain, whatever it is. That's the clearest path, because you can more or less create a brand new blockchain that's you know, two-way pegged to Bitcoin, doing that. But if it's going to be in the main one, it's hard to see how it would work right now.
Yeah, anyway, I think we'll pick it up later, because otherwise we can talk about this all day. It's always debatable whether you want full anonymity on chain, because that removes a lot of the useful cases where you don't want anonymity. And my number one case for that is government tax revenue. That is not something I want fully anonymous. I want that to be fully open to the public, right? And I know libertarians think we're going to get rid of taxes, but we're not, right? So I would like for something like that not to have this feature. So there's going to be lots of discussions here on both sides.
All right, unless you guys have something last to say.
I could argue with Tone about that, but I'll let that one pass.
Yeah, we'll pick it up another time, probably during our drive chain side chain discussion one day.
Yeah, I feel like it could be its own show for sure. So Jimmy, turning to the mempool, is there anything interesting going on today?
Well, so the mempool's been increasing recently. I don't know if you have the screen share up yet, but basically there were a bunch of transactions in like sort of the 20, you know, like 20 to 80 range yesterday. That's like that green bar over there, and you know, some of the yellow. But you know, they're all sort of clearing. If you if you have like 6 to 7, you're going to get in transactions today without a problem. And I suspect some of that at least is spam or somebody cleaning up or something like that. We'll have to see what happens in the next week or so. But that's to be expected. During the week, you're going to have more transactions, and by Friday, Saturday, Sunday, they tend to clear a lot more. So if you're not in a hurry, I think you can get it in for like 1 or 2 Satoshi per byte.
Awesome. And price, Tone. Looks like more good news today. Price of Bitcoin is up to 10,750. What's going on?
Let me do screen share now. So go ahead and throw the focus on me. And I got to update my charts. This goes to show you guys, I have not even looked at the price at all today. Just a busy morning trying to understand all this news. Updating my charts now.
Your connection was interrupted.
Yeah. Always having connection issues. All right, so I did a show last night. I'm going to try and do another one tonight as well. It will be more QA, more focused on price. This is just going to be a very short one. And so the weekly chart, again, I'm not excited here. I'm sorry, guys. Like we're still in a bearish posture. The weekly chart is totally neutral. I'm waiting for a close above last week's high, and preferably above on a weekly chart. I need next week. I need next week to start trading above this week to even start getting excited about the bullish case for Bitcoin. Here is the daily chart, which last night I switched from a logarithmic chart to a linear chart because the linear chart gave you an additional rejection point a few days ago. And once again, this trend line has rejected the price last night at a double resistance line of trend line plus 128-day moving average. And this candle is not looking very hot. We got 7 more hours to go. It's currently trading below the 50-day moving average. And once again, this is one of those cases where, hey, the time indicator is telling you that you can go long because the 2 is trading above a 1. But I think I made it very clear last night that I would be very, very careful with this trade to the upside. And if I was to take it, it would have been very, very small because of all this mounting resistance in this area. And I would need a daily close above 11,300 in order to consider daily for more upside. The 4-hour chart is currently on one of these 9s, and we did finally break out above the 50-period moving average. You're hitting a 9. I'm not surprised. There is a pullback here. Let's hope it's only a 1 to 4 candle correction and then back to the upside. But right now, if you were in this bullish trade using the 4-hour candles, in the last 4 hours, you should have been taking your profit and reevaluating your trade towards the end of day. Hourly chart is, again, the aggressive 13s. I'm really liking them. Again, another indication on an hourly chart would have timed you out of this trade absolutely perfectly. And again, you're looking for a bit of a correction. And let's look for that golden cross on the 1-hour chart and see if we can go back up. And on that note, I'll give it back to you, Leah, to close us out.
All right. Goodbye. Oh, let me get it off. Learning curve too. Goodbye and see you tomorrow.
Bye, guys.
And this song is done.